Futures point to a slightly lower open as the ECB leaves rates unchanged and boosts quantitative easing. In corporate news, Credit Suisse trades lower following a surprise fourth quarter loss, while Pepsi announces job cuts. The earnings calendar is full once again, and economic data includes jobless claims and natural gas inventories. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Yes, it's been a light week for economic data to come out. The earnings calendar's still full, and we're continuing that grind higher.
Yeah, every day there's something new to look at. We've been really focusing on Europe, whether we'd come in and see a deal done in Greece, even though every day it's not there. You know, futures and the market's taken in stride. And really, we're just grinding higher in the S&P. We're getting some alpha in different sectors. Every day there's a different group that's making headway. So, as some of that positive data comes in, as Europe muddles along, we're still getting some really nice price action here.
I also think, too, speaking of trends that we've identified, look, the earnings trend that we're seeing for Q1 is large cap tech is really owning this tape. Lots of cash. Dividends are there. We see some buybacks. But what we're going to look at for our sector spotlight is the 52-week high. Before we get there, though, let's look at the SPX overall so we can position our day for trading. Yeah,
if you take a look at this chart, it's been a very methodical move to the upside. Yeah, every step along the way, the upper levels have been holding. If you look right here, that was at October low. Then we'll just get right to this ascending channel that's been intact for almost, like 4 to 5 months now. It got ignited on this December 20th gap and go that we talk about all the time, and then it's been slowly, methodically moving up. Every level we go to, we create a new floor. Like here, we went up, created a new floor. Went up, created a new floor. Went up, this time took a little bit longer, and recently, in the last 3-4 days, we've been holding higher, and this market still has pent-up energy, and we're going to even be getting close to look where we're at. If you go resistance-wise, you have 1356, and then last year's high of 1370 is pretty close to and pretty attainable.
And it's really tough because if you're a closet bear, the biggest thing is, well, there's no volume on the tape. It's really hard to identify your spots, and we keep grinding slowly higher and higher. But think of it like this. Volume doesn't matter. Once you get that retail money back into the game, that's where your supply is, because retail money is going to come in and buy. They're not going to come into this market. And short, let's move to our sector spotlight where we look at some stocks that could make 52-week highs.
Yeah, like you said, everyone complains about the volume of some. Just look for volume in the particular stock at their breakout levels. That's when it's important. Overall, market volumes have been very light. It's been the new normal for a year or two, and stocks that go up on light volume could still pay you if you're long, and if they go up on light volume, if you're short, you're still going to get hurt. So look at the overall price action and the tape.
Right. I mean, even look at big names like Caterpillar, IBM, which we're going to talk about more in the long call version. These are names. How much higher can they potentially go? Again, once that supply comes back into the market, things get really exciting. Speaking of, in the trenches, we're going to look at dividend names. That's been a key theme this year, and we're going to talk about everything from biotechs to tech names to energy names, and you've been talking about that for a while where we're looking at rotation back into energy.
Well, first back to those mega cap stocks that could break out, that can give us really big clues on if we can go to that 1370. IBM, I love the chart. It's been hanging around. It got rid of a lot of those fears when it came out with earnings, holding higher. This thing starts to get above 194, 195. It's going to power the tape higher. You look at Caterpillar, different sector, another name that everyone loves. This is when we talked about buying it, had a big run. This was the earnings. It's now rested. Now we start getting above 114, 114.50. This can go. And last one here in those mega caps that I love, look at Qualcomm. Big move into earnings, been resting about 4 or 5 days. This gets above 62, and you're going to see another move. So I'm watching these 4 or 5 big stocks. If they can get above these key breakout areas, you're going to see another move to the upside in the market.
Right, and not only do we love them technically and fundamentally, these names like Qualcomm, traders just absolutely love to trade, so it's fantastic for your set. At the end of the day, don't forget real money, options, profits, and on T3 Live, of course, Scott reps up the charts for you every single day.
Hi. I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.